Chances are, if you're a fitness business still open in 2020, that you've taken advantage of the PPP loan. If you haven't, please go back and check out our other content and know that the PPP application or the PPP loans are available for just another few days as of this blog publishing. We would recommend strongly that you take advantage of this program in order to provide necessary cash to your business during these times. But for those of us who have already learned and seen, PPP all over the news and have taken advantage of this program, we are aware that this money is originally stated as a loan. The PPP loan was passed on March 27th as part of the CARES Act. And in order to have the loan be forgivable, you had to meet certain criteria. Forgivable means that you don't have to pay it back or you don't have to pay a portion of it. Originally, these forgiveness criteria were very strict and were something that many owners felt they would have trouble making if they weren't actually open and operating their businesses. As time went on, the U.S. Treasury and Congress passed laws and interpretations of these laws that made it much easier for people to qualify, made it much easier for business owners to qualify for more forgiveness or potentially full forgiveness of their loan amount. They did this by moving the goalpost further by changing the percentage of the funds that had to be used on payroll from originally 75% down to 60%. And they increased the amount of time in which you can make that requirement from 8 weeks to 24 weeks. 24 weeks is basically 6 months. So that's a pretty long time to have to spend just 60% of these funds on payroll for your team or for your employees. Knowing that they've changed these requirements, virtually everyone is going to qualify for full forgiveness. And certainly there will be some exceptions for people who, have, just for example, large owner salaries or really haven't reopened in any meaningful capacity and don't expect to reopen through the 24 weeks since they received their PPP funds. But by and large, most people will qualify for forgiveness. And the U.S. Treasury kind of recognizes this. And so right now, just starting the end of July, we are starting to see people receive a forgiveness application from their lender. One of the biggest financial tech services companies, often called fintechs, named Lendio. Among others, there are Cabbage, there's PayPal, and there's a few others. Just on this week, let's just say just this week, they sent out the forgiveness application form. And the federal government had the forgiveness application form published a few weeks ago in early July. However, banks weren't ready to accept it yet. It seems that we had heard that banks are going to start accepting this at the end of July. And just now we are hearing of our clients receiving messages from their banks to let them know the forgiveness application is ready to be accepted by the bank. That would all be well and good. You could go and fill out the forgiveness application. However, we would recommend that you don't do that. And here's why. We believe that the government will soon, let's just say 2 weeks ago, in the middle of July, Steve Mnuchin made a public announcement that he's very open-minded to what we're calling rubber stamping loans of under $150,000. This means that these people who have loans of this dollar amount would not be able to or would not have to fill out a forgiveness application. Steve Mnuchin did say he wanted to prevent fraud and try to just kind of do a veracity check, or he didn't use those words, but he wanted to make sure that there weren't fraudulent loans out there, but he wanted to make it easier for taxpayers rather than have to fill out these forgiveness applications. Now, by and large, we know that the large majority of the dollar value of the PPP loan went to million and billion dollar companies in chunks of, $1, $2, or even up to $10 million. However, the volume of loans, the borrowers, largely 70% of them were of amounts of $150,000 or less. So even though big companies came in and took most of these dollar amount of funds, the large majority of borrowers were of smaller businesses. And so the federal government recognizes this, and the federal government doesn't, well, let's start at the bottom of the poll. The federal government, let me rephrase that. The federal government doesn't want to audit these PPP forgiveness applications. The banks don't want to receive them. The accountants don't want to do the work. And the taxpayers don't want to pay their accountants to do this forgiveness application. Originally, the forgiveness application was this 11-page behemoth. It was very unwieldy, and we were projecting it would take us somewhere between 6 and 10 hours to fill it out for each of our small business clients, not even big clients. They did release an EZ form in early July, and that EZ form is significantly less work, but still has quite a few catches in it that for many of our clients and many small business owners would still require 3, 4, or 5 hours worth of work. Even for a CPA, we're projecting that taxpayers, it would take them even longer to fill this application out if they were even to be able to do it correctly. So what we're anticipating is that due to all of these pressures from all of these groups, and even the AICPA recently made an announcement that they're putting pressure on the U.S. Treasury to rubber stamp these loans of smaller dollar amounts. But everybody together is saying, look, this is kind of silly. Everyone is going to qualify for forgiveness based on these more relaxed criteria. And so why don't we then, make it just rubber stamped? Why don't we just let everybody go and receive the funds? So with all of that in mind, we're projecting that in probably September or October, we're going to see some movement either by the U.S. Treasury or Congress to rubber stamp loans of potentially under $50,000, but probably under $150,000, so that you don't have to fill out the forgiveness application. There may be some information they want to collect on a small one-pager, but by and large, we believe the bar is going to be lowered even further. And so right now, you should not fill out the forgiveness application, and you should not pay your accountant to do it. You should not respond to your bank on it. You're not required to fill it out anytime soon. You have quite a bit of time to fill it out even after the end of the 24-week period. For most people that borrowed, even if you borrowed very early on, your 24-week period is going to end in October. For many of our clients who borrowed, shortly after the PPP funds became more popular and available in the second wave of funding, their PPP 24-week period is going to end in November. And so you've got quite a bit of time until that is even here. And then after your 24-week period ends, you have a good chunk of time, which I don't know that date. I'll have to Google it. But you have a good chunk of time in order to fill out that forgiveness application. For most people, that means they have until 2021 to really sort this out. So we recommend hanging tight. We know it's hard to be patient through all of this, and there's so much uncertainty in the coronavirus world that you're looking for more certainty and clarity. But we would recommend that you be patient, save the time, the challenge, and the headache of doing this yourself or hiring your accountant to do the forgiveness application, and just wait. And then if and when Congress makes these changes that make it, rubber stamped or easier to qualify, that you'll know that you got the best advice and you didn't waste a bunch of your time or money going through this process. We hope this has been helpful, although we can understand how it's frustrating to continue to have patience in the environment that we're all in right now. But by and large, most of you should be 100% forgiven on this loan anyways. And that really is the key piece of information, is knowing that you won't have to pay back the majority of these funds. We do want to mention one exception, is that if you received EIDL funds and PPP funds, let me rephrase that. If you received EIDL grant and PPP funds, then you will have to pay back PPP funds to the amount of the EIDL funds you received. So if you received $10,000 from EIDL and you receive $30,000 from PPP, you'll have $20,000 of PPP forgiven, and you'll have to pay back $10,000. And that's because you participated in both programs, and you're only allowed, they had a mechanism in there so that you couldn't double dip into both programs, even though you were permitted to apply and receive money from both. Rather than paying back the EIDL program $10,000, you actually shuffle that money over and you repay it to the PPP funds. Now, it's paid back over 5 years and at a 1% interest rate, so it's very favorable. But worth mentioning that there will be scenarios that even though you qualify in all other respects to have PPP forgiven, that there may be an amount there that you have to pay back over time. Talk with your accountant or reach out to the Fitness CPA, and we can help you make those determinations so that you can best project, what the future of your business and cash flow looks like.